So the European Central Bank has just increased the interest rate by 0.25%, bringing it now to 3.25%. And not only that, they haven't pointed towards there being a pause at all. In fact, the ECB president had a direct quote saying, "We are not pausing." That is very clear. So what I wanted to do in this video was discuss about Irish mortgages and how this interest rate will affect you, and how the upcoming interest rate rises, by the sounds of things, may also affect your repayments as well. So I mentioned the ECB having a 3.25% interest rate, but what then happens is banks like, for example, Bank of Ireland, AIB, etc., all the lenders here in Ireland then have to make their profit as well. So what they do is take that 3.25% and add on anywhere from 1 to 2% on top of that. For example, if we look at the Bank of Ireland 5-year fixed rates for loan to values of over 80%, we can see that they're currently offering a 4% interest rate. And I'm not even fully sure, seeing as the ECB rate hike only came yesterday, that this figure includes Bank of Ireland accounting for that. So essentially Bank of Ireland for that 5-year fixed rate could be anywhere from 4 to 4.25%. Let's see what happens over the next couple of weeks. But for now, it's 4%. Then if we take a look at AIB for the same 5-year fixed loan to value over 80%, we're looking at 4.3% there. So that's what these current prices are. And the scary thing is that if we look back even just a year ago, we've seen mortgage interest rates around the 2 to 2.5%, maybe 2.9% interest rate. So they've gone up quite a bit since then. And the worry here is that a lot of people who maybe have fixed their mortgage for 5 years ago are now going to suddenly end up with their mortgage fixed term coming to an end, maybe moving on to a variable rate, and that could be up near this 4.5% if not higher by the time their fixed rate ends. What's even potentially worse, if someone is maybe 3 years into a 5-year fixed mortgage right now, in 2 more years, the fact that they've pointed out they're not going to be slowing down anytime soon, they could have had something like a 1.5% or 2% interest rate, and now we're going to wake up to about a 7% interest rate. That's possibly as high as things could go. Not trying to scare anybody, but it's something that people should be prepared for and be able to account for. There's a really good tool on the CCPC website where you can basically put in whatever amount you still owe on your mortgage, or you can put in whatever amount you'd be planning to go for a mortgage for, select the term of what's remaining or what you hope to get, and then put in the interest rates and just see how them repayments start to change. One example here, which is kind of what I'm hinting at, which could be scary for some people, is let's say you took $350,000 out for 30-year mortgage at a 2% interest rate. Your repayments are going to be $1,290. Now let's say you come out of that fixed term, and let's just keep the same figure for ease, but let's say it's the $350,000 still, but now you're paying 6%, then repayments will go up to just over €2,000. So quite a large difference there, and maybe something people might not have to be able to cover. So some people could find themselves in a bit of a tricky spot. So the main thing to note here is it does look like more rate hikes are coming. Have a check in if you currently have a mortgage, see what term is left on your fixed mortgage. If you have a fixed mortgage, check out what the breakage fee is if you were to break that fixed term and fix for a longer period of time at a new interest rate before we see some more of these hikes coming. Or just take a look at this calculator and get an idea for if your fixed rate does end in a year or two's time. Let's assume the interest rate could be 5.5–6%. Will you be able to afford that? And if not, maybe start to have a think about what kind of changes you need to make now to be able to account for that. So again, not trying to scare anybody, just wanted to bring this reality to a lot of people that interest rates are going up. It doesn't look like they're pausing at the minute. Currently set at 3.25% by the ECB, and then you have to remember the other banks, in the Irish market in this case, then add on top of that whatever kind of profit they're going to be making, which seems to be around the 1.5 to 2%, obviously depends on the lender. So anyway guys, I'd love to know your thoughts on this. Do you think in a couple of years time things will have calmed down and we'll start to see interest rates fall back down, or do you think we're going to see ourselves in this high interest rate environment for quite a bit longer? Would love to know down in the comments below. If you did enjoy this video, make sure you do drop a like on it as well, and subscribe to the channel for lots more content.